Hey guys, welcome to The Market is Open. Check out our website, themarketisopen.com. Today we're going to be talking about why Tesla's analysts, the analysts that cover Tesla, don't really understand the company. Okay, on the agenda for today's video, we're going to be talking about Chamath Palihapitiya. He had a great interview actually on CNBC, and we're going to talk a little bit about that. He's really incredible at articulating his thoughts, and I thought this would be great to touch on. We can also talk about ARK Invest, which they reiterated their $4,000 price target on Tesla, which I believe might be a little bit too bullish, but we'll get into that in a moment. We'll also talk about why Tesla's analysts can't value the stock. Canada also launched its EV incentives for today, and Tesla found a loophole to get around some of the restrictions. And lastly, we're going to talk about the April United States deliveries. But first, please subscribe to our YouTube channel. We would really appreciate your support in helping us grow our channel. Also, check out our investing t-shirts and our Elon Musk t-shirt as well. Okay, so we're going to start by talking about Chamath Palihapitiya. He's a VC, venture capitalist. And he was a senior executive at Facebook from 2007 to 2011. He also had some pretty big investments in Palantir, a company called Playdom, which was acquired by Disney, and a company called BumpTop, which was bought by Google. He's a bull on Tesla, and he has a stake in the company, but he owns the convertible bonds, not the common shares. So that's a little bit different. If the company goes under, for example, the bondholders get paid out first. But that said, this interview was actually amazing, I thought. You can actually just Google for it. It's on CNBC. But basically, Chamath, he really speaks his mind, and he puts the bullshit aside, and he's really incredible at articulating his thoughts. So basically, he starts off by saying that the average person can't hit a golf ball into a teacup off the pier that the interview is taking place on. But Elon Musk has basically hit this teacup 9 times out of 10 with SpaceX, with Tesla, and basically by applying his second-to-none technical sophistication across all of his companies. So clearly Chamath is holding Elon in pretty high regards, and he's very impressed with how far his companies have come so far. He calls his investment a riskless option on the Edison of our generation. And the reason why he says is riskless is, again, because he owns the convertible debt, and he believes that that sits on top of the equity, and he's going to get paid out first should there be any problems. The other thing that he's focused on is not the quarter-over-quarter performance of the company, but he takes like a 3 to 5 year view, and he says that if you look back 3 to 5 years of where Tesla was in 2014, you would be ecstatic as to where it is today. So looking forward 3 to 5 years, we should be a lot better off than we are today. And one interesting thing that he says is that the stock isn't controlled enough by Elon Musk or the insiders of the company. Instead, it's controlled by vulture-like hedge funds that prey on the company. That's what he says. So he says it's sort of out of control of the founders of the company and firmly in the hands of manipulators of the stock. So that's Chamath's view about how the stock is run, which is why he prefers these convertibles. So Chamath, he says he's 100% comfortable with the way Elon runs the company, and Scott Wapner is the interviewer, and he keeps saying, what about the funding secured tweet? What about the way he's managing the company and all that stuff? But Chamath is like, what are you talking about? He goes on to talk about the beautiful display of the car and how incredible the Model 3 is that he actually just recently purchased. He actually tells Scott Wapner that he says, you're getting caught up in the window dressing while Chamath is focusing on the main course. And he says, like, the main course is in front of you, and your choice is to either buy it and like take a bite out of it or don't. And your job as a smart investor is to separate the facts and the news from the fiction and the noise. And that seems to be a lot of what's happening around Tesla stock. And he basically says that the funding secure thing and all this tweeting and sort of that kind of stuff is all basically just noise. And if you actually looked at the company itself, you would see a huge amount of progress that's being made. So I thought this was a great quote where he says that the minute you sit inside that car, your definition of what is expected is altered forever. And I think that's completely true. I remember the first time actually that I was inside of a Tesla, and then I went back to my regular car. I was pretty disappointed in what I was driving. So Scott Wapner asked him about, like, what about all the competition though? The Audi's coming out with their new car, the e-tron, and what about all of that? And so Chamath starts talking about all of the Zune media players that he bought after the iPhone was announced. So he's basically, making fun of the fact that once there's a solid first place competitor, you don't go out and buy like the second or third or last place product. So he makes a pretty incredible analogy here. He actually says that this is basically similar to Tesla's iPhone moment with the car, and that Elon's substance is irrefutable whether you like his style of management or not. So near the end of the interview, Scott Wapner brings up Jim Chanos, and Chamath says something like, Chanos only makes money once a decade, and then he goes on CNBC for 5 minutes to talk about it when something works. So, but overall, I think one of the takeaways is that he says being long innovation makes sense, and betting against entrepreneurs that are changing the world has never made any sense. So why start now? So I think this is a pretty incredible interview. He speaks his mind and like cuts out all the bullshit, and I really like that. And I really liked his case for owning his Tesla convertible shares. So at the same time, we also heard from Cathie Wood from ARK Invest. We've covered some of the things that ARK Invest has talked about in our previous YouTube videos. But basically, ARK Invest, they actually have their own ETFs, their exchange-traded funds, where they actively manage a couple of their innovation funds. I believe they have 4 of them that are publicly traded stocks. They have a $4,000 price target on Tesla. I personally think that's a little bit, it's not that it's too high or anything, like it's not that they're too bullish, but their time horizon is much further out than the average investor. So they're looking maybe 5 years down the road, whereas the typical investor is looking 6 to 12 months. So that's why 4,000 might not make sense to a lot of people. The stock hasn't even hit $400 yet, so how could it get to 4,000? So, but they're just looking at Tesla through a different lens, and they believe that all of the people that got burned in the year, like in the dot-com bubble in 2000, they're super fearful now about not just Tesla, but other innovative companies, but specifically they're talking about Tesla in this case. And they're sort of afraid to get back into these sort of innovative companies, even though like the innovations are here today. In the year 2000, it was just a dream, whereas today, like we're actually seeing the results of the innovation, and people are afraid to get in. So that has a lot to do with Cathie Wood's thesis at ARK Invest. In terms of Tesla, they're pretty excited about the AI chip. They said that that's a huge plus for the company, and they actually have an analyst or somebody who used to work at NVIDIA as one of their analysts, who's saying that Tesla is 3 to 4 years ahead of the competitions. Now, just to make a note on that, NVIDIA does have, Tesla was using NVIDIA before in their previous generation, before they made their custom Hardware 3 chip, and NVIDIA does have other chips for self-driving, which, like they say, have better specs actually than the Tesla ones. I believe the Tesla chip is processing at 144 trillion operations per second, and NVIDIA has one that's 320 trillion operations per second. But Elon Musk has been saying on Twitter that the chip has a couple problems which don't really satisfy Tesla's needs. One of the main problems is that the chip is using 500 watts of power, whereas Tesla's chip only uses 72. So Tesla clearly has the lead on a way more power efficient chip, which is gigantic, especially if that chip is sucking away your battery life. That could contribute to a loss of 30 miles per charge, which is pretty huge. Okay, so one thing that Cathie Wood brings up is that she even says that analysts don't know how to value this stock, meaning Tesla. They don't really know how to pull it all together. Like, they're not sure what type of company this really is. Is it a car company? Is it an energy company? Like, they're not really sure. And at ARK Invest, they have 4 different analysts. They have like robotics and energy and AI and car and transportation as a service that all have to come together and collaborate in order to try to figure out this company. So that's why she believes that there is an amazing inefficiency in the stock and how people are valuing it. Here's just a snapshot of the ARK K Innovation Fund. It's readily available like publicly on their website. It is an ETF, a publicly traded fund, and Tesla happens to be their largest holding of this particular fund, which is actually up 20, I believe it was up 28% from the time of the interview, even though Tesla was down 29%. So obviously their other stocks were helping prop up the portfolio since the beginning of the year. Now, I also just wanted to touch upon this article that was written by Hamid Shojai. He had a great piece on the Tesla Autonomy Day and about the short sellers. And one of the valuable things that he found when he went to this event was that he realized that all of the analysts who he was talking to at the event were car analysts. And he also noticed that the Uber and Lyft analysts were actually internet analysts. So he believes that's why there's a huge disparity between the Tesla stock price and like Uber and Lyft type stock price. He's saying, for example, like Uber and Lyft are trading at 10 times sales, whereas Tesla is only trading at 2 times revenues, for example. I mean, that said, I wouldn't use price to sales without knowing the margin of the company. But like looking at the growth rate of the companies, Tesla is growing faster than Uber. It is making more money or more revenue than Uber and Lyft, and it does have a track record. Yet the valuation for Uber and Lyft does seem pretty stretched, whereas Tesla's seems pretty cheap relative to their growth. So I think this is also in line with what Chamath had to say with sort of the manipulating of the stock, and with also what Cathie Wood had to say at ARK Invest about how the analysts don't really know how to value the stock, and they're not really collaborating with the different parts of the industry that need to be all pulled together into this one company in order to sort of figure it out. A lot of people aren't doing that, and at ARK Invest they believe they are doing that. Okay, let's switch gears here a little bit and talk about the new EV incentives in Canada. There's a $5,000 Canadian incentive that was launched today. Tesla was supposed to be excluded from that because it would only apply to cars that were less than $45,000 Canadian. The Tesla Model 3 is about $53,000 Canadian. I believe that the standard version starts at $47,000, which is above the Canadian government's $45,000 limit. So what Tesla did is that they basically announced a 150 kilometer range Model 3, which is quite low actually. That's about 93 miles. However, they priced it at $44,999, which gets them right below the incentive, so that they'll be able to qualify for the incentive. And this will be a software limited car. So once you buy the car, I mean, the government does allow you to add additional features as long as the base price is below $45,000. But Tesla can just unlock the higher range because it's simply the Model 3 Standard Plus, and it has like that kind of battery capacity and capabilities in order to boost range to make it into a Standard Plus car and still get the incentive. So that was pretty interesting. It means Canadians will still be able to take advantage of the $5,000 tax credit in Canada now, which should help sell more Tesla cars. And speaking of which, the US vehicle deliveries for April just came out today, and Tesla reports to have sold about 10,000 Model 3s in the United States during April alone. That's pretty comparable to last month in March. Now, these are US deliveries only that we're looking at here. Tesla, of course, has started to deliver cars in Europe and in China. So if you look at, for example, April 2018, which is on the far right here, although the US deliveries look about 2 to 3 times higher this year, last year Tesla wasn't selling to Europe, and this year they are. So basically these results should be even higher for this quarter. However, for some reason, Tesla pushes most of its sales or deliveries to the last month in the quarter. So you can see from January to March, most of the sales were in March. And that seems to be the trend among not only Tesla, but even the Chevy Bolt in this case, but also across all of Tesla's different brands. So I think it's good that they're starting off April pretty high up, and that's already on par with what March was, which should be the best month in that quarter. However, Tesla's sales last quarter were very light. They delivered about 60,000 cars in the quarter. They said about half of that, so about 30,000 cars was delivered in the last 10 days of the quarter. So that seems pretty crazy. I think they're going to start trying to spread it out a little bit better over the course of the quarter. The best month last year was December, where they sold 25,000 cars in a single month. However, that was all in the United States. Now we really can't tell because part of the sales will be going to Europe and China. And I know that they had about, I think it was 10,000 cars in transit. That said, they expect to deliver 90,000 cars. So they need about 30,000 cars per month. If they're only selling 10,000 in the United States in April, they need to sell 20,000 in Europe to do 30K per month. But usually a lot of it is pushed into the last month of the quarter, which in this case will be June. And also the advantage, though, of spreading it out is that they get a better customer experience. That's something they talked about on the conference call. The other thing is that the Righ Hand Drive cars were just launched today in the UK, and I think they should be ready for delivery in June as well, which should be pretty good timing, I guess. for that last month push in this quarter. The other thing to note is Model S and X were pretty light in the first 3 months of this year. We're looking at only the US numbers here, which were also pretty light. But overall, Tesla sold about 12,000 cars is what they delivered, and they produced about 14,000. Normally, Tesla is closer to 25,000 Model S and X combined for the quarter. However, they did just refresh their lineup for Model S and X, and Zach Kirkhorn, the CFO, expects the sales of these two cars to come back by Q3 of this year. Alright, I hope you enjoyed this video. Please subscribe to our YouTube channel. We would really appreciate your support in helping us grow our channel. Let me know what you think in the comments section below and smash that like button. Thanks for watching.